if you've already eclipsed the, let's say, 25-year repayment threshold, then, and you still have federal student loans, then you should be expecting some kind of forgiveness of that remaining balance. And what's really cool about what's in this details that is in this announcement is that any payment you've made beyond what that forgiveness time frame would be for you, you'll get a refund of that payment. That's even more encouraging.
That is student debt expert and VIN Foundation board member, Dr. Tony Bartels, with Dr. Rebecca Mears. And this is the VIN Foundation's Veterinary Pulse podcast, special student debt series. I'm Jordan benShea, Executive Director of the VIN Foundation. Join me as I talk with veterinary colleagues about critical topics and share stories. Stories that connect us as humans, as animals, as a veterinary community. This podcast is made possible by individuals like you who donate to the VIN Foundation. Thank you. Please check the episode notes for bios, links, and information mentioned. Welcome back, everyone. We are happy to have you with us again, and we are back for, you guessed it, another round of the student debt series with VIN Foundation board member and student debt expert, Dr. Tony Bartels. And we're talking about the latest in student loans because, as we know, it's ever changing. And this time we also have another new guest with us. We have our new student debt team member, Dr. Rebecca Mears. So welcome, Tony. Welcome, Becca.
Yeah, thanks for having me again, Jordan. I feel like as soon as we finish one podcast about an announcement, another announcement is made, and we have to jump on and talk about what the new information means for everyone.
Yeah, it's just nonstop.
Yeah.
Welcome, Becca. We're thrilled to have you here as well.
Thank you. Tony, what does retirement look like for you? Because this is never going to stop changing, right?
Right. Well, as soon as my loans are forgiven, then we'll see what my retirement looks like. But yeah, I'm still quite a few years off from that, even with these new announcements that were made.
So, Becca, you're new to the team. Do you want to share any sort of little tidbit of information with our audience about how you came to join the team?
Yeah, thanks, Jordan. So I'm Rebecca Mears. I graduated from University of Georgia in 2020 and was working as an equine veterinarian up until I joined the VIN team earlier this year. And prior to that, I had been working with VIN Foundation through the Rising Leaders Committee. And so I'm really excited to kind of be here today and dive into this topic with you guys.
Wonderful. So let's dive right in. And a couple of weeks ago, we brought you the news about the student loan repayment pause being extended yet again to August 31st. And that was announced, of course, the day that we chose to do a webinar on student loan repayment. And today we are diving into the announcement from the Department of Education that was made on April 19th, 2022, where they announced lots of changes that will increase eligibility for forgiveness through income-driven repayment. And pretty much this is any borrower with loans that have accumulated time in repayment of at least 20 or 25 years. That seems confusing already, so we'll dive into that. We'll see automatic forgiveness, even if you're not currently in an IDR plan. So, Tony, we've been hearing whisperings about forgiveness. You know, there's been threats, lots of threats of forgiveness. So is this what people have been threatening about? Is this what we've been hearing about? Or is this something different? Let's kind of dissect this for our audience.
Yeah, I mean, so yes and no to all of that. So I think that this was probably not how most people were envisioning loan forgiveness happening, right? So there had been a lot of discussion that the administration might and still could just cancel some amount of everyone's student loan balance, or at least federal student loan balance. And they've been reluctant to do that. And they still keep telling us that they're reviewing whether or not the executive branch has the authority to do something like that. But in the meantime, they have come out with these new guidelines that is apparently in their purview to do. And that is basically counting any amount of time that you've been in repayment on federal student loans towards forgiveness. So that is really that will result in forgiveness for a lot of borrowers, particularly borrowers who have been in repayment on their student loans for 17, 18, 20, 25, 30 years, right, and still have a balance remaining. So this is really kind of I'm kind of jokingly calling it a time machine for student loan forgiveness. So I think there was a lot of frustration from past borrowers that, hey, I missed the boat on a lot of these newer, more beneficial plans, but yet I've been paying on my student loans forever. How come I can't get forgiveness? And this is your chance at forgiveness. So the more challenging part is knowing whether or not you have the right loan types and then how much time you've been in repayment that might count towards forgiveness.
So what spurred these changes? I mean, I heard rumors that it was an NPR article. Obviously a ton of political pressure, but what was it, do you think, that was really the linchpin in making this happen?
Yeah, I mean, if you read the actual press release from the Department of Education, they make reference to, having student loans was never meant to be a life sentence of repayment. And that's really what spurred these changes was that, there's making payments towards your student loans for decades was never really the goal, right? But for a number of reasons, with the way student loans are structured and the way that higher education costs have increased over the last 20 or 30 years, greatly exceeding income increases, people are in repayment for a long time, right? And if you don't do everything exactly correctly, then you can be in repayment for an even longer time. So I think really this is meant to go back and correct some of that. Now, there were some reports about how ineffective the current forgiveness plans, the current income-driven repayment plans have been. And honestly, just knowing how those work, that was to be expected, right? So really the only income-driven plan that's been around long enough for anyone to receive forgiveness was a plan called income contingent repayment. And unfortunately, the way that plan was structured, the monthly payment that you would make towards those loans, how much of your income that payment would be, really didn't seem like it was designed to result in student loan forgiveness, which is one of the reasons why we don't see a lot of people or haven't seen a lot of people qualify for forgiveness using that plan yet. They either switched away from that plan because it didn't result in a low enough monthly payment to work with their budget, or if they made payments under that plan for a long enough period of time, they would have probably paid their loans to zero by then. So that was not a very effective forgiveness plan to begin with. And some of the newer versions like pay as you earn and income-based repayment and revised pay as you earn haven't been around long enough to actually result in any kind of student loan forgiveness. But we will see that happen in the coming years.
Okay, so like I sort of alluded to in the beginning, it says this is for borrowers who have been paying for at least 20 or 25 years. Who qualifies for this forgiveness, and how do you begin to determine what that is? That seems like a 5-year span, and what is the definition of those? I mean, it seems like there's a lot of questions that come out of this.
Yeah, my best guess on that, because I don't know exactly, but my best guess on that is going to be based on whether or not you have loans from graduate school or undergraduate school only, right? And since we're predominantly tasked with helping veterinarians, my guess is that anybody listening to this has graduate school loans. So my guess is that you're going to be in that 25-year time frame. But until we see them actually start to implement some of these changes and go back and count some of those payments and actually grant forgiveness, we may see something different. I'm not sure. And
when are these going to start taking effect?
Yeah, soon. I think they're gonna a lot of work to do. They're hoping to start granting forgiveness and doing the retroactive granting of forgiveness, counting payments by January of 2023. Right, so that's where they're hoping to have made, I guess, the first pass or first run through of this for all the borrowers by that time frame.
So that means if I'm a borrower and I've been making payments for 20 to 25 years, I'm thinking 2023 is going to be a really good year.
Potentially, yeah, or maybe even sooner.
Right.
Hopefully even sooner than that. So yeah, I mean, if you've already eclipsed the, let's say, 25-year repayment threshold, then and you still have federal student loans, then you should be expecting some kind of forgiveness of that remaining balance. And what's really cool about what's in this, one of the details that is in this announcement, is that any payment you've made beyond what that forgiveness time frame would be for you, you'll get a refund of that payment. So that's even more encouraging. Although I wouldn't get too terribly excited by that, because federal student loan, the pandemic forbearance has been in place since March of 2020, right? So nobody's really had to make a payment since March 2020. So unless you've made payments for 25 years up to that point, you're probably not going to get much of a refund. But I guess we'll see. It depends on the specifics of your loans.
So what do colleagues need to do to get this forgiveness? I mean, is this just automatic? They've been paying and then suddenly they get a statement that says 0, you're all done, and they're just, okay, cool, now I've got a lot more cash to work with? Or how does that work?
Yeah, in most cases, this is going to be automatic, meaning you don't have to do anything. However, given the time frame that we're talking about, going back 20 and 25 years into the past to look at your loan types and repayment plans and history on your student loans, we cross over a number of versions of the federal student loan borrowing experiment. So over time, there have been different loan types. And prior to the direct loan program, we had what was called the Federal Family Education Loan Program, or FFEL program. And within that program, you can have both what's called federally held or managed student loans, as well as commercially held or managed student loans. So there was kind of an indication that there was a public-private partnership going on between the Department of Education and private lenders to provide guaranteed student loans. It's kind of a random issue in terms of whether you have the commercially held versions or the federally held versions. Anyone who has the federally held versions doesn't have to do anything under these announcements. Everything is going to be granted automatically based on your loan types and repayment history. If you have the commercially held versions, then you do have to consolidate them into a direct consolidation loan before they go through this first pass of adjustments. So you have to do that consolidation before the end of this year if you want to be considered for these adjustments.
And if somebody's not sure what type of loans they have, I know that we have tools for that. And as always, all these things that we're talking about will be in the episode notes, but will you two sort of walk them through what do they need to do to kind of find out if they're unaware of whether it's commercially or federally held?
So I would start with studentaid.gov. So if you have federal student loans, or you ever had federal student loans, you can set up an account, or you will already have an account with studentaid.gov, right? You use your social security number, an email address, and your phone number to set up that account, and they'll find your federal student loan borrowing history. And then once you're logged in there, you can look for your student aid data file. This is going to be an ugly looking text file that contains the complete history for your federal student loan and borrowing repayment details. Once you have that file, you can take it over to the VIN Foundation Student Debt Center using the My Student Loans tool. We have a tab in there that can help you differentiate between federally held and commercially held FFEL program loans. So that's the easiest way. That's what I do when people ask for help in terms of, how do I know if I'm eligible for these? I ask them for their student aid data file. I upload it into the My Student Loans tool on the VIN Foundation Student Debt Center, and I look at the loan servicer tab. Right? In the loan servicer tab, if it says Department of Ed before it says your servicer name, then you have the federally held version of the FFEL program loans. If it doesn't, if Department of Ed is not there and it just lists a loan servicer name like American Education Services or Nelnet or AidVantage, what used to be Navient, right? If it just says that name and it doesn't say Department of Ed ahead of it, then you have the commercially held versions, right? And that means you are one of the people who have to consolidate in order to receive the benefit of these most recent announcements.
And Tony, my understanding is that the benefit to these commercially held federal loans there is going to be really impactful, because those individuals that have had these commercially held loans haven't been able to benefit from some of the pandemic forbearance issues. Is that correct?
Yeah, that was also correct. So the pandemic forbearance benefits were only applied to the what was called federally held student loans, and that included all the direct loans as well as the federally held FFEL program loans, but it excluded the commercially held versions, right? So you can kind of see a pattern here, right? So that the Department of Education has way more latitude to do these sorts of things with the loans that they have direct control over, right? But the ones that are in that commercially held realm, they don't have as much flexibility, which is why they need you to take those loans, put them into a direct loan, so then they can apply these changes even retroactively.
So we kind of touched on it a little bit earlier, but as we mentioned in the last podcast, we talked about how this student loan pause extension has been extended again to August 31st. So now we have borrowers thinking about this pause extension, and then there's this forgiveness. Do those impact each other? How does it affect those who are currently which is everybody, in forbearance for the student loan payment pause extension? How does that impact this? I just kind of want to see if there's some way that we can give people some clarity on that.
Yeah, I mean, in my opinion, I think that this is probably some pretty good indication that they're likely to extend
once again, of course.
Pause. Yeah, because I mean, if you think about it, I mean, they're giving themselves through January 2023 to kind of go through and apply all these changes, right? And rather than having to issue refunds from September 1st through January 1st, I mean, they're probably going to extend that through January just to make sure that they've done their first pass with these expanded changes to forgive as much of the student loans as they possibly can, which means, not having to worry about restarting repayment for a number of or thousands of borrowers, right. Probably, right? So it just logistically seems like it's quite likely that will be extended. Now, I don't get to make that decision, right? I'm just kind of
which we're all
reading
upset
the
about,
tea
by the
leaves
way.
here, right? Yeah, exactly. Right. But if I had to guess, it probably would be extended to match, what this time frame is for them to go through and make these changes. But we'll have to wait to see on that specifically, right? So we can't really ignore our student loans, right? We have to kind of think about what repayment might look like after August 31st if we are going to re-enter repayment. But again, just based on kind of how this recent announcement is structured, it seems likely that they may extend that again.
Tony touched on this earlier as well. They're giving themselves until January 2023 right now to make these changes. And so it's been made pretty clear through the Department of Education's press releases and things that even though those changes are going to start now, borrowers may not be seeing those changes on their accounts until the end of this year. Potentially even further is my guess if as the government starts making these changes and they find they need to give themselves some more time past that January 2023 date. Would you say that's correct?
Yeah, absolutely. I mean, this is a heavy lift.
Well, right? I mean, everything the government does goes totally seamlessly, so I see no issue.
Right. Yeah, exactly. I mean, but this is kind of the quote, the current president, this is a big effing deal, right? I mean, to go back in time and to count any amount of time in repayment where your loans were theoretically in repayment as potentially forgiveness eligible is huge. So, hopefully we're going to see lots and lots of borrowers who have been in repayment for what seems like forever, just see that go away, right? You're going to see your loan balance forgiven. And thankfully, now we can see some method to the madness here when Congress passed this forgiveness exemption, the tax exemption for loans that are forgiven between 2021 and 2025. Now that makes a lot more sense, right? Because prior to this announcement, there weren't a lot of people who were probably going to experience student loan forgiveness between 2021 and 2025. And now we're going to see probably tens of thousands of borrowers receive some form of student loan forgiveness between now and the end of 2025, and you won't have to pay tax on that, which is another huge benefit, right? So normally, if you have some amount of any kind of debt wiped off your ledger automatically like that, you would have to pay tax on that amount that's forgiven, right? The IRS usually treats canceled debt as if it's earned income. So this is, again, all of the confluence of student loan events that have happened over the last couple of years here are really, really seeming to be extremely beneficial. And, I'm kind of waiting to see some confirmation from borrowers, and particularly veterinarians who've been in repayment for a long time, to actually receive that forgiveness. But I'm super excited about what's written in this.
Well, if any of our listeners are out there and you get a statement that says 0, please reach out to us, because we definitely want to know.
Yeah, right.
We want to share your story. I mean, we've had proof of concept for a couple colleagues who have gotten forgiveness for PSLF, and that's really exciting. And we're hoping to do an episode with one of them. But yeah, we always want to hear your stories. So please reach out. So the 20 to 25 year, I'm just thinking, if I'm somebody out there that's been if I'm somewhere between the 20 to 25 year, and I'm wondering, is the 20 year, because of this forbearance, does the 20 year start like now, or is it, if I was making, for instance, if I was like on my 18th year in 2020, and then we went into forbearance, and because I haven't had to make payments for the last 2 years, let's call it May 2020 to May 2022, and I was in 18 years in May of 2020, and now this May 2022, I'm in 20 years. Does that mean I qualify?
Theoretically, yeah. Theoretically, yes, because the pandemic forbearance benefit is meant to qualify towards forgiveness, right? That's actually specified in the law that created that pandemic forbearance benefit. So, and also in this recent announcement, they talk about prolonged periods of deferment and forbearance also counting towards this special reconsideration towards forgiveness. So there's a lot of opportunity there for periods of time that otherwise wouldn't have counted towards forgiveness, even under an income-driven repayment plan, to be considered eligible forgiveness repayment time.
Okay.
Right. So that's all going to be part of this grand accounting exercise where they're going to go back in time and look at all of the quote repayment time that your loans have been in. And if you eclipse the magic 20 or 25 year barrier, depending on, what kind of loans you have, then you will be that step closer to forgiveness, or maybe already receive forgiveness.
Okay. So one thing I did hear on a story was, if you were in forbearance at some point, though, you might not qualify, but that's a different forbearance than this student loan payment pause extension. Is that correct?
It's a loaded question.
Yeah.
Well, I remember hearing that on a couple different stories, that could be that if they were in forbearance, and I think that people might get confused with, wait, but I'm in forbearance now, but that's almost a forced forbearance, right, by the government, which is a pause. How does that compare? So we don't want those borrowers to get concerned that they wouldn't qualify because they're in this, forbearance now.
So we have to just separate out the current pandemic forbearance is a very, very, very special type of forbearance, right? It is not like any of the other types of forbearances that people would use, right? So, and because it's a very special type of forbearance, it is treated very differently from those previous or other type of forbearance periods. So don't worry about the pandemic forbearance period. It's extremely beneficial. There's no interest, there's no payments, and the time that you're in it will count towards forgiveness.
Great. Yeah.
Right. Prior periods of forbearance before this announcement were generally not considered to be eligible for forgiveness. Right. But there is some special consideration now under this new announcement for prolonged periods of forbearance, right?
Okay.
So more than 12 months or more, right? So if you had your loans in a forbearance period because your income was low or you didn't have any income for a long period of time, they may consider that towards your forgiveness eligibility time as well. right? So
Okay.
that is a different consideration under these particular announcements, this expanded announcement.
Right. And I just wanted to clarify that for listeners, because I think somebody might hear the word forbearance and think, oh my gosh, wait, but am I for that? There's just so much confusion, right? So, okay. So what does this mean for borrowers who, for instance, have been paying for 15 years and are thinking, forgiveness seems pretty nice. I'd like to not have that quote unquote tax bomb. I'd like to be able to use that money for other things. Am I going to get, my loans forgiven as well? What are the chances that this is going to, stick around?
Well, you're going to have, for those people, once they receive or can see notification of how much forgiveness qualifying time they have, they're going to have to make that decision, right? So I think that's another huge part of this announcement,
right?
Are the pledge to start counting and make visible the qualifying payments you've made towards forgiveness. That's always been kind of one of the big holes that has been still existing in the income-driven repayment program, is that it was very difficult to know exactly how many months of qualifying time you had. Public service loan forgiveness has a way for you to track that, right? So there's actually a field in your student aid data file that after you submit a public service loan forgiveness employment certification form and document that progress, you'll see the months that you've logged towards forgiveness accrue in that file. Now they're talking about applying that same kind of concept to income-driven repayment plan progress, or under these expanded announcements, any kind of federal student loan repayment time that's eligible towards forgiveness. So hopefully in early 2023, when we download a student aid data file, we're going to see exactly how many months the Department of Education says we have towards forgiveness. And then depending on the plan that we're using or the eligible forgiveness date for us, whether that's 20 or 25 years, we'll have to decide whether or not it makes sense for us to keep working towards forgiveness, or if my income and family circumstances are such that I can pay those loans off before that, maybe that makes more sense. It really depends on, it depends on the specifics of your general circumstances. However, I will say, if you have more than 5 years before you would be eligible for forgiveness, well, that's going to be beyond what is currently the tax exempt window for how student loan forgiveness is treated by the IRS, right? So unless Congress continues that tax exemption beyond the 2025 tax year, right, we could see a taxable or a tax liability incurred for those folks who receive forgiveness beyond 2025. We kind of have to wait and see on that.
A lot of this stuff we're going to have to wait and see, right? Because in terms of like the stickiness and what are the chances this is going to stick around with the political landscape like it is, we just don't know yet, right?
Yeah, exactly. Right. So it's good. I think it's probably most encouraging for those of you that have already experienced 20 or close to 25 years of repayment time on your federal student loans. It's really encouraging for those of you who have those commercially held FEL program loans, although you do have to do something before the end of the year. So I really encourage anyone who has federal student loans to just double check, right? See what types you have, whether or not you do have to pursue that consolidation to be considered for these forgiveness counting provisions that have just been announced. We'll put up some screenshots too on the blog page in terms of how you can make sense of what that, how to discern between a federally held and non-federally held FEL program loan, just to make that a little bit more clear. And some of the questions that have come up recently on the student debt message board folder regarding the consolidation is there any downsides to, I've been in repayment for 20 or 25 years with these FEL program loans. And in most cases, a lot of those loans have some very low interest rates. And you're still going to keep those low interest rates. The consolidation, the direct consolidation loan, it's a fixed interest rate, right? So whatever your interest rate is on those current loans, it will still remain fixed after that consolidation. It'll just be a direct loan, right? And because you need that direct loan, in this case, for those commercially held FEL program loans to be considered under this grand accounting towards forgiveness payments, you want to do that, right? There is no downside to consolidation.
And that consolidation for those FEL loans is also completed through studentaid.gov.
Correct. Yep, that's correct.
Okay, so we're doing a new grad playbook webinar coming up on May 18th, and we do these every year. So this is our annual one to kind of help new veterinary school graduates navigate these student loans. But if we have any listeners right now who are about to graduate, any suggestions that you have for them as it relates to this? I mean, obviously this is for way down the line, but they might be thinking, is there anything I should know?
Yeah, so attend the webinar, right? You now
So let's start with attending the webinar.
Right. You're now the third cohort of veterinary school graduates to graduate into the pandemic forbearance period. Generally speaking, I will say that most of you still are doing nothing with your student loans immediately after graduation, which is not the appropriate step to take, right? So please attend the webinar so we can talk about the better steps to take, because I really want you to graduate, consolidate your student loans, do a direct consolidation loan, and apply for an income-driven repayment plan. If you haven't filed a tax return for the 2021 year yet, do so. You still can, and there's not any penalties of doing that, and you can voluntarily file one even if you didn't have any income. But there are steps that you can take to get started in repayment to make sure you're on the right track, so you don't have to hope 20 years from now there's going to be another one of these, grand exemptions or reconsiderations of forgiveness time. You can just get started on the right path right out of the gate, so there's no question as to whether or not you're earning forgiveness eligible payment time on your student loans.
Yep. Okay. All right. So what else do our colleagues need to know about our changes? What other information do either of you think is really pertinent right now?
I would say that, for those of you in repayment already, right? So not the new graduate class or the students that are still borrowing, really kind of take stock of what you've been doing with your student loans, right? I do still see a lot of people that are making payments during the pandemic forbearance, which generally doesn't make a lot of financial sense. Use that money and use that cash flow flexibility to shore up other areas of your financial wellness, building emergency funds, saving for retirement, particularly in tax advantage long-term savings plans. If you have access to health savings accounts, making sure you're maximizing those contributions, saving for the down payment on a home or even a practice or buying into a practice type of opportunity. So there's a lot of places where you can use that cash flow flexibility that we're all experiencing right now through the pandemic forbearance benefits to really increase your long-term returns on that money. We do talk a lot about that in the last webinar that we did pertaining to the extension to the pandemic forbearance benefits. So check that out if you have questions on that. You can request a refund of any payments you've made during the pandemic forbearance period, which is another huge benefit to go back and almost get a do-over if you want those payments back. Be really reluctant. I do see, because the Fed is raising interest rates, and we're going to see student loan interest rates go up a little bit, not on anybody that's graduated and everything. It's just for those borrowers who haven't received student loans yet. The loans that they take out in the future are probably going to be at a little higher rate than what we're being used to the last several years. But for those of you that are in repayment, your interest rates are fixed. And I do see a lot of people kind of maybe rushing to consider a private loan refinance because the interest rates might be going up, and they're kind of like, oh, should I do this? Should I pull the trigger? And that is crack for the private loan refinancers, right? I mean, they are really preying off of that kind of thing. But, those private loan refinances, unless your debt to income ratio is less than 1 and it's going to stay there for the duration of repayment, those are really risky, right? So your federal student loans, as we've seen here, have some really, really, really special benefits that you're not going to get in a private loan refinance. So, I would be really reluctant to take my federal student loans out of that system with all the changes that are going on and all the considerations for forgiveness and all the no interest rate and no payment benefits that we've been receiving, to then replace it with a loan that has less flexibility and some interest rate that's greater than 0, right? So I would just kind of pump the brakes on that a little bit until we know exactly when the pandemic forbearance benefits are going to end, and until we see some of these recent announcements play out and how much qualifying forgiveness time we actually have towards our student loans.
Well, and if a borrower pursues that private refinance, they lose the benefit of any potential future changes to these federal loans as well. Isn't that correct, Tony?
That is correct. And that's a great point because you can't go back, right? That's one of those things that you cannot go back and undo. And there has yet to be an announcement that includes private student loans in any of these special considerations, right? So I just don't, and I don't anticipate that happening, right? I mean, there's some special tricks that they can do to get these commercially held fells into the federal system so they can treat them under these special rules, but I'm not aware of any proposal or any announcement that would go and try to apply those same kinds of things to private student loans either. So just be really, really careful before you pull that
And
trigger.
also, as we've said with the student loan pause extension, make sure all of your contact information is up to date, because if you're going to get a statement that says 0, you want to make sure that's going to the right place.
Absolutely.
Wonderful. Thank you both. Any other last words before we sign off here?
Tony, if I've heard you say it once, I've heard you say it 1,000 times about the changes the Department of Education usually gives us with federal student loans. Generally just makes it a better experience. And I think this recent round of changes here really showed, an effort to try and improve things overall.
No doubt. And it is confusing and it's head spinning to stay on top of it. For the most part, though, you haven't had to do anything.
Just
right?
listen.
So, a lot of these benefits are just automatically applied. Right. But you still want to kind of stay plugged in, right? And know what's going to happen so you can make the best decisions going forward. But yes, I mean, everybody who is always worried about, well, what if they just take away all of these benefits or they make forgiveness go away? I mean, the momentum has always been to improve rather than make more punitive. And we continue to see that. So, and there's a lot of this stuff that is enshrined by law too, which is extremely durable, right? So, I mean, forgiveness on its own is provided under the Higher Education Act in the income-driven repayment plans and is codified by law, right? So they can't really take that away. Now, some of these things that they're expanding it beyond what the income-driven repayment plans intended, some of that can maybe be taken away, right? But if you already benefit from it, congratulations, right? It's just maybe some of those folks that aren't quite to that finish line yet that may have to wait and see exactly how durable some of these extra provisions are. But for the most part, again, your federal student loans continue to get more beneficial rather than less. So, explore what those benefits are, take full advantage of them because, there's 1,000 other better things to do with your money than pay more than you have to towards your student loans.
Thanks, listeners, for joining in. Thank you, Tony. Thank you, Becca. And we look forward to being here again soon. I'm sure it will not be long before we sign back on with more news.
Probably not. But thank you, Jordan. And if you do need help on any of this stuff or you have any questions,
yes, please ask.
Right, we've got a lot of different avenues for you to ask, and we learn a lot from your questions, and it makes us look deeper into what we're reporting here, and also helps us to adjust the tools that are available on VIN Foundation and the Student Debt Center. So use those resources to your advantage and ask lots of questions.
Thanks, you guys.
Thanks, Jordan.
Thank you.
Thank you for joining us for this episode of the Veterinary Pulse. Please check the episode notes for additional information referenced in the podcast. If you enjoyed this podcast, please follow, subscribe, and share a review. We welcome feedback and hope you will tune in again. You can find out more about the VIN Foundation through our website, vinfoundation.org, and our social media channels. Thank you for being here. Be well.